Hello, Las Vegas. Welcome to the Morning Blend Extra. I'm Sean Tempesta. If you're a high-income earner upside down in your mortgage and you want out, you may think you have no options. Well, think again. Here to tell us more is real estate expert, broker, and owner for First Prime Realty Group. That's Lathe Lavada. Lathe, it's a pleasure having you as always.
Thank you.
So let's talk about this. For homeowners that are upside down, but they're also current on their mortgage. They want to sell, but they can't because it's underwater. Is that the case, or is there an option for them?
There are options for them. I mean, anybody who is in a position that they're upside down in their mortgage, there's short sales out there, there's loan modifications, there's a short sale buyback, there's the HARP, VA, FHA, streamline refinances, just a lot of things out there for these folks to short sell their home.
It's kind of like the knife cutlery situation. There's a different knife for everything. There's a different refinance or short sale depending on your situation.
There sure is.
Let's talk about home values. We saw home values shoot up right after the recession, and now they're kind of leveling off. Why aren't they growing any faster?
You know, that has a lot to do with the investor activity out there that started in the end of 2006. Mm-hmm. It also has to do with, Las Vegas is still 34% upside down right now. So just a lot of inventory still. We saw inventory go up in 2013, the end of 2013. It practically doubled overnight when these investors pulled out of the market.
It hit a certain level for them, yeah.
Mm-hmm. Yeah, because they just couldn't get the return on their money anymore, and this was due to a lot of the short sales that were under contract. Also, you add 7 to 10 years, we've all heard that the real estate market is on a 7 to 10 year cycle. And, the bottom of the market was in 2008. If you add 7 to 10 years to that, we're poised for another downturn. Wow. And we've seen that also trending because 2.5, 3 years ago, we were almost double what we were last year in the increase in equity, which was 11%. Yeah. This year, we're expected to go up 5 to 6%.
So it seems to be cutting by half every year.
It does.
Yeah, wow. Let's talk about people then who are financially stable. They want to get out of the house. Should they wait until the home maybe gains the value? Should they pay the negative equity and do a regular sale? Should they just do a short sale?
It really depends on the homeowner's situation and their plans for the future. Mm-hmm. Just because you have money in the bank and you have a healthy income does not mean that you can't complete a short sale, one of these other programs out there. You really have to take a look at the situation and make a good decision based on how much you're upside down on the property. Some folks are upside down tens, hundreds of thousands of dollars.
And to plunk that down isn't necessarily easy to pay out the difference there. Some people are worried about doing a short sale, though, because it can affect their credit. How does it affect their credit? And how soon can you go back into the market and buy another home?
We see borrowers, with the higher credit scores taking a less impact, of course. And then also, if you're not late and when you complete a short sale or something of that nature, you see a less impact as well. We also see when a short sale is completed on the property and closed out, the credit scores go back up. And quite rapidly, actually, within 6 months to a year.
Wow.
And some folks with these higher FICO scores to begin with, they see a very small decrease
it's a quick
in that
blip.
Exactly,
wow.
Maybe 25, 50 points. And if you're at 700, 800 points, it's not a big bump in the road. Yeah. And you can be able to buy again now within a day after short sale in some cases, or even after a foreclosure or a bankruptcy.
Does the bank require the seller to come with money to the table for a short sale?
I rarely see that. I even see, these folks who are upside down by 500,000 plus that are high income earners, and they haven't had a contribution required by the bank to complete a short sale either, and that's where they'd have to come to table with something, a few $1,000s or something, some skin in the game to allow them to short sale the property. So I don't see it a whole lot. And in fact, banks are even given, relocation money right now. They just increased HAFA by up to $10,000 from $3,000 starting this February.
We have about 15 seconds left. There is a tax liability with getting forgiven debt. However, there are ways to possibly absolve yourself from
debt forgiveness, insolvency.
And the service costs, goose egg.
Zero. The lender pays mine and the attorney's fee that I put on the file.
Which is excellent, so you don't have to put any money on the line. Well, Lathe, it's a pleasure. Thank you so much.
Thank you.
Make sure you catch Lathe on the radio. He talks all things real estate, including short sales and the current state of the housing market. It's available at his website or on iTunes. And for more information on Lathe and his services, you can visit the website or call the number on your screen. He's also on Facebook and Twitter. Have a great day, everybody.